Welcome back to Investing Talk Podcast. Today, we're taking a closer look at a company that's, well, certainly making waves, Rezolve AI PLC. It's a really interesting one because you've got this huge operational momentum, lots of positive buzz, but it's running right up against a pretty significant lack of financial transparency. So, based on the material we reviewed, the big question today is Rezolve AI a good time to buy now? Before we dive in, just a quick reminder, if you find this useful, please hit subscribe, like the video, and leave a comment. And definitely let us know in the comments if there's another company you'd like us to analyze next time.
Yeah, that tension you highlighted is exactly right. It's buzz versus, well, a bit of black box. When we look through the sources, that classic high-risk, high-reward profile just jumped out. The recent activity, the bullish signs, definitely there. You can't ignore them. But it's all built on data that just isn't confirmed yet. So our goal today is to piece together the technicals, this big cash injection they got, and crucially, the missing information. We want you to really understand the level of speculation involved here.
Okay, let's start with the positive side then, the story driving all the excitement. Looking at the last 3 months, say July to September 2025, there's been a fair bit of positive news flow, right?
Absolutely. The main thing was back in September. The company started talking up its accelerated growth momentum. They claimed rapid adoption of their AI platform by enterprise clients. Essentially, they pre-announced strong expectations for their first half 2025 results. That's classic signaling, and the market definitely paid attention.
But hang on, isn't that just standard management talk, announcing momentum without any actual hard numbers to back it up?
It is, you're right. And that lack of hard numbers is something we absolutely need to get into later. It's critical.
Right.
But just looking at sentiment in the charts, technical analysts spotted something. They identified what's called a hammer candlestick pattern.
Ah, the hammer pattern.
Yeah.
So for listeners, that often suggests sellers tried to push the price down, but buyers came in strong.
Exactly. It's often interpreted as a sign that maybe a bottom is forming, suggesting potential for a recovery, kind of like bottom fishing opportunities.
So you have traders looking at the price action, maybe betting the worst is over. And the operational news seems to fit that story too. We saw updates in August about platform integrations, new pilot customers.
Yeah, that operational side seems to be moving forward. Rezolve AI is targeting that big retail consumer engagement space. They license out their Brain Suite product. It's an interesting area, AI tools for retail transactions and engagement. And they also made progress on international expansion back in July, specifically mentioning Asia and Europe.
So they seem to be executing on the global strategy, at least based on their announcements.
Right. In this story, new customers, expanding globally, that's likely what's fueling some of those rumors about institutional interest we've seen floating around.
Okay, let's shift gears then. Looking ahead, the next 3 months seem packed with events that could really move the stock. If you're thinking short term, this calendar is key.
Definitely. There are some specific dates to circle. October 25th is the Q3 2025 earnings announcement. Then, looking further out, December 15th is when they're expected to release Q4 pre-earnings guidance.
And given the high bar they've already set with their earlier comments.
Exactly. If they don't show something solid on customer adoption or hint at real revenue momentum, then the market could react pretty negatively.
Then there's the institutional money flow aspect. November 10th, you mentioned a major ETF rebalancing for AI sectors.
That's right. If Rezolve AI gets included in any significant AI ETFs, you get forced buying, which can push the price up.
But the flip side is true too, right? Exclusion could mean selling pressure.
Precisely. And around December 5th, we get the 13F filings. That's when the big funds, those managing over $100 million, have to disclose their positions. So we'll finally get a clearer picture, maybe, of which institutions, if any, were actually buying during this recent run-up.
Okay, that covers the known events. But what about the speculation, the rumors? We know those can whip up short-term volatility. The sources mentioned a few.
Oh, yeah, there's quite a bit of chatter. What's interesting is the ambition behind these rumors. First, there's talk they might use some of that new cash, which we'll get to, for bolt-on acquisitions.
So buying smaller companies to quickly expand geographically or grab specific tech.
That seems to be the idea. Then, second, there are pretty persistent rumors about a major partnership. Talk is they're in discussions with a big global e-commerce player to roll out their AI transaction tools together.
Wow, landing a partner like that would be huge validation.
Instantly. And the third one sounds almost futuristic speculation about an AI hardware integration pilot.
With a major mobile phone manufacturer getting embedded directly on devices.
That's the rumor. If they pull that off, it would be a massive competitive advantage against purely software-based rivals, a real game changer.
Okay, those all sound potentially huge on the upside. But there was a downside rumor too, wasn't there? Adding to the instability.
Yes, important to balance this out. There are these unconfirmed reports, mind you, that a significant pre-IPO institutional investor might be looking to sell down part of its stake.
Oof. If a large block of shares hits the market suddenly.
You can see a sharp, sudden drop in price. So anyone considering this needs to be ready for that kind of potential short-term shock. Volatility is definitely part of the package here.
All right, we've covered the buzz, the catalysts, the rumors. Let's get to the core issue, the fundamentals. Where are the actual financial numbers? This feels like the crucial part.
This is really where the brakes get hit. The fundamental problem is transparency, or maybe the lack of it. Rezolve AI, formed in the UK in 2023. As of September 2025, the source material is very clear. The company has not reported annual revenues or profitability figures.
Wait, hang on. Let me make sure I heard that right. Despite all this talk of momentum, rapid adoption, a $7 stock price, there are zero verifiable revenue numbers.
That's what the sources state. No verifiable revenue, no net income figures, no officially disclosed growth rates in their current public filings.
So no proper 10K annual report, no detailed 10Q quarterly reports filed.
Not according to the available information as of the source date, which means, assessing growth or profitability objectively right now. It's impossible. Investors are essentially being asked to trust management's promises about the future, not based on any proven track record.
And without those standard SEC filings, you're flying blind on so much, you don't know their debt levels, how much cash they actually have, or critically, how fast they're burning through cash.
Exactly. Now, they did address the immediate cash need. That's important. They recently completed a very large private placement. Oversubscribed, raised $200 million, expected to close around September 25th.
Okay, $200 million is significant. That certainly buys them time, improves liquidity.
It does. It gives them an operational runway they absolutely needed. They've said the plan is to use it to boost their sales efforts, potentially fund those M&A rumors we talked about, and for general working capital.
The market obviously liked that news, seeing it as a vote of confidence from institutions.
For sure. But raising that much money by issuing new shares in a private deal, that comes at a cost. We need to talk about dilution.
Right. That's the elephant in the room. Explain that risk.
Dilution risk here is pretty significant. It's immediate. When a company issues a large number of new shares, like they did to raise $200 million, each existing share represents a smaller piece of the company pie. Your ownership percentage shrinks.
So even if the company's total value stays the same initially, your individual shares are worth less of that total.
In proportional terms, yes. The stock price needs to rise substantially just to offset the dilutive effect on your holding. It puts immense pressure on the company to deliver on those growth promises, and fast.
Because if that new money just helps them survive longer without generating real verifiable revenue growth,
then existing shareholders basically paid a hefty price just to extend the runway without seeing the upside yet.
And let's not forget the competition. Even with cash, this AI retail space is incredibly crowded. You've got established giants.
A very tough market. Rezolve AI talks about differentiation through things like cross-border data compliance, mobile commerce, R&D. But they're up against huge players every single day. That execution risk is very real. So let's tie this back to the technicals briefly. As of September 23rd, the price was around $7.18. Lots of volatility, which is pretty normal for these newly funded microcap situations.
And what about key trading levels the analysts flagged? Support and resistance.
They noted support seems to be in the $6.20 to $6.50 zone, where buyers tend to step in. Resistance, where selling pressure often appears, looks to be between $7.50 and $8.20. Now, while some short-term indicators might look positive since the funding news, analysts warn they aren't very reliable. There just isn't enough historical data yet for Rezolve AI.
Makes sense. And the final piece, which really underscores how early stage this is, what about Wall Street analyst coverage? Buy, sell, hold ratings.
Simple answer, there isn't any. Not from major brokers anyway, as of the source date. Any investment decision right now is purely based on, well, speculation and whatever digging individual investors can do.
Okay, so let's bring it all together. Back to that original question. Is Rezolve AI a good time to buy now? Considering everything, the momentum, the cash, but also the huge transparency gap, what's the overall rating from the sources?
The sources landed on an overall rating of 4 out of 10.
Only a 4. Wow. Given the lack of any verified revenue, I'm almost surprised it's that high. Why not lower?
It's really because that $200 million in cash is significant. It's real money. It signals that some institutions were willing to bet on the story, at least privately, and it gives management potentially 2, maybe 3 years of runway to actually try and deliver. That cash provides a tangible floor, preventing immediate collapse.
But that's balanced against.
Completely balanced against the major dilution risk and the, frankly, total lack of visibility into the actual business performance right now. So the conclusion from the sources is pretty blunt. They rate it as unsuitable for long-term investment, at least not until we see audited financials and proof of real commercial traction.
So not a long-term hold based on current info, maybe for short-term trading.
That's the suggestion. It might be considered a speculative instrument purely for trading around news events or those catalysts we discussed. But the risk profile is extremely high. We're talking pure speculation here.
The kind of investment suitable only for capital you are genuinely prepared to lose entirely.
Precisely. It really boils down to that core conflict. The exciting operational story and the runway versus the complete void where fundamental financial data should be. It's that classic FOMO versus fundamentals tension.
A perfect summary. The story sounds great, the runway is there thanks to the cash, but the foundation is still invisible.
Exactly. It's a massive bet on future execution. And since that $200 million is earmarked for sales acceleration and maybe M&A, that next proper filing, the first full 10K whenever it comes, will be absolutely critical viewing. So maybe here's a final thought for you, the listener, to chew on. They raised $200 million by diluting existing shareholders, promising faster sales and maybe acquisitions. The real question is, how do you weigh that immediate guaranteed dilution against the potential speed of growth this funding might unlock? How long are you willing to wait without seeing the proof in the numbers?
A very important question to consider against your own risk tolerance. That brings us to the end of this analysis. We hope breaking down the buzz versus the fundamentals for Rezolve AI helps with your own research. Please remember to like, subscribe, and drop those company requests in the comments section below. Thanks for tuning in, and we'll talk to you next time on Investing Talk Podcast.